Hi, good morning everyone. Quite a disappointing close for Nifty Future in yesterday's session, so as you say. We had a positive gap up opening thanks to the positive global cues. It opened at close to that 49.40 mark. We were looking at a resistance at 49.50. From those highs, the index actually gave back over 100 points throughout the day, completely failed to sustain above those levels, and posted a provision close at 48.45. This is the 60-minute hourly chart of Nifty Future, and as you can see, right after the opening bar, it was quite a sell-off for the index throughout the day. Quite a weak close. The momentum indicators represented by RSI and MACD histogram 2 are showing that this down move can extend further down. MACD indicator is just given a negative crossover. We are still in a downtrend. We've been calling that only a move above 49.50 will lead to a trend reversal. So we were inching close to that levels, but we have failed, and it seems that it needs to earn another 110 points for that. But at current prices, we are in a downtrend across both the immediate and intermediate time frames. We focus back to our Fibonacci clusters, which is at 47.40, 47.80 range. That's where the supports are. That's where the supports were, and which actually held pretty well, resulted in 140 points bounce. But that's our focus right now. What if it breaks below 47.40? Then I think the next level to watch for would be that close to that 45.85, 45.90 range. That's exactly the lows of Jan this year. From we had an excellent rally for Nifty Future. Now, majority of this weakness in our equity markets is an outcome of the depreciating rupee. We sense that the rupee will find some strength close to the 261.8 targets once they were met, but it seems that the weakness is still there. This is the chart of the USD INR pair, and as we speak, the index have actually inched further up close to that 55.5 mark. It's kind of a little scary if we look at the long-term charts, and this is the quarterly chart of USD INR, which shows there is breaking above a rising channel. From a short-term or from an immediate time frame, we have a target for this in index close to that 56.8, 57 mark. If that happens, then we sense that the weakness in Nifty is likely to persist. We also sense that the current market scenario is getting all its triggers from the rupee, and we'll wait close to see whether this index can manage to test that 57 mark. In such a case, a test of 47.40 or a break below that is very much likely. In terms of the stocks which dragged the index down, it was mainly the large caps, SBI, HDFC Bank, L&T, ICICI Bank, Reliance. Most of these names are Nifty 50, which actually fell in the range of 1 to 3%. Reliance is one stock which was down close to 1%, gave off completely from the high of 704. The ones which held fairly well, not much of a surprise, were the large cap IT, thanks to the depreciating rupee or the strengthening dollar. So TCS is one stock, HCL Tech is the other one, in Infosys as well, which managed a bounce back, or actually did not fall that much in yesterday's trade. The other odd stocks which held okay was Tata Motors, though still in downtrend. HDFC Bank oscillated within a quite a wide range, and then Kane Energy, which has managed to move into a short-term uptrend. However, we sense that this is not the best of times to look into stocks, as the Nifty per se is trying not to fall further down. The sentiment is still very weak. The rupee is depreciating at a much faster rate. 47.40, 47.80 is the level we watch for tomorrow's trade. A break of the previous swing lows, and we are back to a very strong downtrend across all time frames. Trade well. Thank you.